Ladies and gentlemen, welcome back to the channel. AMC Stock today is pretty flat. Broader markets are rallying higher. This is actually the highest point you have been at for the NASDAQ since 2022. You're almost breaking out to a all-time new high. I think that is probably coming over the next couple of weeks. We'll talk about that here in this video. But I think more importantly than that, we're going to get into the data here with AMC Stock. Option activity, short interest, stock tracker data, everything you need to know in that regard. But Janet Yellen just came out and made some comments that I find particularly striking. I do think a Fed U-turn is right around the corner. We're going to look at the probabilities for Fed policy when we're expecting the first rate cut, if those are moving around here today as well. So we have a lot to get into, a jam-packed one for all of you guys watching this one. I hope you guys find some value out of it. Hit that like button and subscribe to the channel if you have not done so already, guys. And let's just go ahead and jump straight into it. AMC is basically unchanged today. You're down 1 penny. You were just unchanged. You were slightly positive at one point. So today is really a toss-up. Who exactly knows what's going to happen? This week itself is a very strange one just because it's a shorter week. You have the holidays, and then the bond market's closed on Friday. So Thursday, you're going to be totally closed. Everything's going to be closed. And then on Friday, bonds will not trade, but stocks will trade. Our markets recently are trading mostly on what the bonds are doing, what the bond market is doing. So yeah, the end of this week's going to be a little bit weird. Now, tomorrow you have that big catalyst, which is going to be NVIDIA earnings. I don't think that comes to anyone as a big shocker. NVIDIA earnings will be important. That's tomorrow and after hours. But it's not going to be the thing, I believe, that make or breaks our markets. During the summertime, the markets were rallying off of AI. Really, it was all about AI and what's coming next for AI. And now it's more so on Fed policy. I don't think the markets are going higher on AI basically at all anymore. It's only about Fed policy. It's about lower yields and lower rates into 2024. So that's important. Now let's get into what Janet Yellen just said. So Janet Yellen says high food and rent prices are key factors in voters' negative economic outlook. Treasury Secretary Janet Yellen pointed to consistently higher prices that Americans pay for food and rent versus pre-pandemic levels as a major factor driving voters' negative outlook on the economy. We're making considerable progress in bringing inflation down, but Americans do notice higher prices from what they used to be accustomed to, Yellen told CNBC. As President Joe Biden runs for re-election, the disparity between the White House sees as considerable progress and what voters experience could be a major factor in the race. Says although prices in general are rising less quickly, Americans still see increases in some important prices, including food, from where we were prior to the pandemic, and remains notable to people who go to the store and shop, Yellen said on CNBC's Squawk Box on Monday. She says, so I do think we're making considerable progress in bringing inflation down, but Americans do notice higher prices from what they used to be accustomed to. She said that over and over and over again. It says nearly 60% of registered voters disapprove of Biden's handling on the economy, while only 38% approve, according to the most recent NBC News poll. And that's like major left leaning. Okay, that's like if that's saying that. Yeah, the broader numbers probably don't look nearly as good as well. Now, this says you see all these high-level headline numbers, and those numbers don't jibe with your economic reality. Senior economist at labor analytics firm Lightcast recently told CNBC's Jeff Cox, I don't know if there's a right or wrong, it's just people's reality. People don't like it, okay? Sunday's NBC News poll also showed for the first time Biden trailing former President Donald Trump in a hypothetical 2024 presidential matchup. So, I mean, even your left-leaning media is not predicting Biden will win. You know what's coming next, right? Like, let's be honest, rate cuts. There is no way the current administration is going to stay in office unless they give you fat rate cuts here quickly. They need the consumer to feel more optimistic. They need the consumer to have more money in their pockets and hopefully prices to go lower. If prices don't go lower, I mean, then what do you need? Well, you need to really boost up the economy, make it affordable to buy a house, right? Even if you cut rates and home prices go up a little bit, who cares? Your payment's going down. They need to make it affordable to get a new car. None of those things are affordable right now. And we'll see. Maybe, you know, the current president doesn't want to stay in office, then nothing will happen. But if you know, Mr. Donald's going to have a lineup here for 2024 and a real challenge at this point, you're going to see a lot of rate cuts here before the election. And that's why I've talked about this many times. You want to be in small, mid-cap companies, interest rate sensitive companies. I think rates are going to come down a lot more than markets are pricing in. I think they have to. I think that's in, again, Biden's interest. Without that, there's no way he's going to win the election, right? Or win a re-election. So I think that's a sticky, troubling situation to be in if you are the current president. You basically have no choice but to pressure the Fed into cutting rates, like Trump did himself in 2019. And what happened? You had 3 rate cuts in 2019. So I think that's very important. I think that ultimately means rate cuts are coming. Now, what's actually interesting about today, 10-year Treasury yields are up almost 2 basis points, which is not a huge jump. That's pretty lackluster compared to what we have seen normally, right? There's been big moves in bond yields on a day-by-day basis. Just as of the end of October, you went from 5% and everyone was screaming 10, 13, 15% 10-year treasuries once you hit 5%. Now treasuries have fallen about 50 basis points down to 4.459%. So you've fallen a lot recently, and you got to remember, retail has been invested in our markets, right? Retail has been here. We've been buying the dip. We've been getting crushed. But big money has been either on the sidelines or in mega cap tech. That money is going to flow out of mega cap tech. It's going to flow out of treasury funds, out of money market funds, and make its way into stocks. It's not going to happen all overnight. And I think that's why treasury yields are even slightly positive today, slightly, going higher. And what's happening? Well, stocks are also going higher. Your Russell 2000 is up about 0.5%. Your NASDAQ up 0.76%. S&P up about equivalent to the Russell 2000. And the Dow is the laggard today, up 0.32%. The VIX is down about 1.3%. If we look at the percentage of stocks above their 50-day moving average, that's ticking up about 2% today, from 61% of stocks to 63.63% of stocks. So not quite to your highs you've seen back in July, where you were at about 76% of stocks above their 50-day moving average. So this tells you maybe we do have further to run here if you're not even back to where you were in January, all things considered. Stocks today, if you look at your NASDAQ in particular, are hitting a new high you have not seen since January of 2022, which was almost 2 years ago now. So with that being said, guys, we'll wrap this up at the end of this video, kind of give you guys a summary of all of what we just talked about. But let's now get into some of the data here with AMC Stock today. There's really no news, nothing notable, nothing new to bring to you. So I'm not going to rehash old stuff. But essentially, we've been faced with this dilution. I think the dilution has already happened. At the very least, it's been priced into the stock. And I think this gives you more time to maybe not see dilution. And as you should know, if rates do come down in a big way, like I expect they will, that's probably going to mean AMC can actually go to the bond market instead of diluting shareholders. Diluting shareholders is not exactly what you want to do. You'd rather go to the bond market. But, if you can't, then you're going to dilute shareholders. Now, take a look at this. So for December 13th, less than a month away, there's a 5.3% chance the Fed cuts rates. 94.7% chance the Fed stays at pause. There is a 5.2% chance the Fed cuts rates in January by just one rate cut. 92.8% chance of a pause, and 2% chance of a rate hike. For March, the probabilities are going up even more today. It's now 31.5% chance of a cut by March and a 1.6% chance of 2 rate cuts by March. Currently, the odds of actually seeing rates stay, pause, stay held through March is 65.6%. So this is the first time in a long time where you've actually been pricing in a chance that rates move lower soon. Like there's a 5% chance by December 13th rates will get cut. If you get some bad data reports here that's showing the economy slowing more than expectations, you're going to get more rate cuts priced in. Let's say durable goods orders on Wednesday are negative. I mean, you could theoretically start to price in a rate cut in December. And historically, whatever is priced in here on this Fed rate monitor tool, which is basically just looking at break-evens of treasuries to get the pricing in or probabilities of Fed action, whatever's priced in here is what the Fed does. That's just the bottom line. Every single Fed meeting over the past 2 years, the Fed has done whatever was priced in, whether it was 75 basis points of rate hikes, whether it was 50 basis points, whether it was 1 rate hike, whether it was a pause. Whatever is priced in more than 50%, that's what the Fed always has done for like 40 years in a row. So that's why they jawbone and try to, say their policy ahead of the time, because they want the markets to price that in. Now, for May 1st, currently is when you're pricing in the first rate cut, and that is 45.5%. Odds of that, 39% chance or 39% odds of a continued pause through May, and a 13.9% chance of 2 rate cuts, and about a 0.5% chance of at least 3 rate cuts by May. So the markets are really taking this as like, hey, maybe the Fed is going to cut rates more than we thought they're going to. If you look at the 10 and the 2-year yield curve, it is uninverting even more. As of recently, the end of October, you were inverted about 14 basis points. Now you're inverted 44 basis points. And believe it or not, if the yield curve is inverted, that's actually a good thing. When you actually uninvert on the yield curve, that's when you need to be watching out for a recession, because over the last 8 recessions, every single one of them happened after you get an uninversion. Every single one of them. It's 8 for 8. It's never been wrong. Maybe this time will be different. That's what some people argue. But when the yield curve goes positive again and goes back to a normal state, likely when the Fed is, about to cut rates, that's probably what would happen. Then, that's when you really want to be on radar or look out for a possible recession. And usually it can come 1 to 3 months after that does go positive. So we'll keep you up to date, up to speed on the yield curve uninversion or inversion, whatever we continue to do. And we'll see what ultimately comes about that one. Now, let's take a look at the data here for AMC stock. You have a short interest of free float at 9.1%. $134 million worth of short positions currently on AMC stock. Days to cover 0.82. 18 million shares that are currently sold short. Shares out on loan 13.4 million. Cost to borrow 1.37. Utilization of about 31%. And a short score of 56 or 54.2 out of 100. Cost to borrow fees, cost to borrow average about 2.71%. Cost to borrow minimum 1.9%. Cost to borrow max 6.91%. Quick look at the option activity here. You have 34 orders totaling $18.16 billion with a positive order value of 55%. Holy moly. What the heck is going on here? What? That's I'm kind of lost for words right now. That's something very, very strange. Huh? Okay. We'll talk about that more in the next video. We really need to break that down separately because holy crap. Wow. Whew. The next video is going to be exciting, guys. I did not expect to see that number when I looked at the option activity here today. Long story short, the market cap of AMC is 1.5 billion. So this is like 18 times the market cap of AMC trading hands and options alone today. And it's positive. It's bullish. For a little bit of context here, for something like a Tesla, right? I have quite a bit of Tesla stock, so I like to stay up to date with their option activity as well. A big day for Tesla options is like $4 billion worth of options, 5 billion maybe. You're at 18 billion for AMC with 55% positive order value and only 34 orders. Huh. That's going to get exciting. We'll break that down in the next video. Some of these I can see most notably like a $9 call worth 1.92 billion. You have lots of trades though that are like 600 million plus dollars. $7 put worth 1.64 billion dollars. $8 call expiring this week worth $617.65 million. All kinds of crazy orders that you're seeing there. So holy moly, we'll have to break that down in the next video. That really calls for a video in and of itself. Nonetheless, the AI investor sentiment survey, like I said, guys, is more bullish now than it was last week. You're slightly less neutral, but you are slightly more bearish at the same time, which is actually good to see. The bears increasing a little bit. You don't want to see this so bullish that it turns into a bearish scenario. And that's kind of how I'm looking at NVIDIA earnings. Like I said, I don't think it's going to be that big make or break stock like it would have been over the summertime, right? If NVIDIA over the summertime came out with bad earnings, that could have caused a black swan event in and of itself. I'm not expecting bad earnings from NVIDIA, but I'm not expecting the stock to actually do a huge jump, right? It's already expected NVIDIA is going to have really good earnings. So NVIDIA would have to come out with something just off the charts to really move the stock higher from here, considering you're at a new all-time high, I believe today. I know you hit one over the past couple of days. So it turns into one of those situations where people say, hey, is this the best it's going to be? Is it downhill from here for NVIDIA? We'll have to wait and see. The next couple of quarters actually have higher growth figures priced in, so that will get pretty interesting. And I think NVIDIA will be a big catalyst overall, but definitely it's going to be an interesting one, guys. So that is basically it. Again, just to summarize this video, it looks like even the left-leaning polls with like an NBC, which is very, very left-leaning, are showing that Trump is ahead and theoretically is going to win the race. And that's, again, left-leaning. That's not right-leaning. That's not, down the middle. That's left-leaning. Imagine what down the middle looks like and right-leaning looks like. You're doomed. You're screwed if you are the current president. You have to start lowering rates. You have to make people feel more wealthy. You have to make households get in a better place. If a household wants to move, you have to lower rates so they can afford a monthly payment to buy a new house today. That's just a simple fact of the matter, and that's just not happening as of right now. So I do think rate cuts are coming a lot more than we expect, and the markets are pricing that in here today. You are getting a higher probability of actually getting those rate cuts, guys. So that is going to go ahead and do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.